A mortgage is a really big loan. And it's come about
Really?
from exactly that question. So, they say 47% of people in the UK, even people that have a mortgage, don't understand mortgages. And part of that is coupled with just the lack of financial. But one of the things that we will be doing is the Mortgage Ready Challenge. So we
Okay.
will be helping people situate themselves from day one to be ready for a mortgage as quickly as is possible for them. Okay, so we're going to go through all of the steps. We're going to show you how to build credit. We're going to show you how to manage your finances in a way that you'll be ready for a mortgage as quickly as possible, because there are lenders that will lend from day one and offer mortgages for skilled workers from day one in the UK. Now, those are very unique cases, but they do exist. So I would say the first time you should seek out a mortgage broker is as soon as you land, you're living somewhere, and have a job.
Hello and welcome. Today, we are so privileged to have Anthony Lindsay, a highly accomplished author and public speaker and expert at finance. His experience spans over 3 decades now and in the industry of mortgage and banking. Anthony has worked with banks in the US and UK. He is a licensed mortgage broker. He works with individuals who want to secure commercial and residential properties, especially the first time buyers. I would like to welcome you to the call, Anthony.
Thank you, and thank you for having me. I'm really privileged to be having this conversation.
Absolutely. So, our conversation today is going to be based on mortgages for the first time buyers of people that have just relocated to the UK. So, I've got two stories that I need to break down, Anthony. So, the first story is the imaginary person that we need to speak to. So, one of our the audience that are listening to this is someone who has migrated from Zimbabwe, precisely because I do come from Zimbabwe as
Okay.
a healthcare assistant, and we're looking at somebody who is a couple, husband and wife, and they've just started in the UK. And then the second person is a single parent, someone who is living alone with their kids, and then also someone who is a single person who is never married, no kids. So these are
Yes.
the three categories of people that we need to address throughout this session, and because that's where the majority of people um, are. That's the first issue. And then the second story that I need to tell you is that, you know what intrigued me to get to know you, probably don't know about this, but I just thought I should tell you about it. So, a friend of mine who just relocated to the UK slightly over a year ago sent me a message to say, "When are you coming for home welcome party?" I'm like, "Okay, what happened?" They said, "We got mortgage. How did you do that?" You know what? So they tried to explain that a lot of mortgage brokers they offer advice for free. Find a mortgage broker, and I ignored that. And then the second part was a friend of mine again bought a mortgage. I'm like, okay, what's really happening? I then spoke to a friend of mine, the third one now, who has been in the UK for a long time. I asked them the pros and cons for mortgages, and they say, you know what, I don't have any experience about mortgages, but you need to find a mortgage broker. So that term kept on appearing. They said, you know what, for them, it's all pros throughout. So I had these little questions that I have, and then another friend of mine sent me your flyer where you wrote to say mortgages for skilled workers. I was like, okay, this person is speaking to me. And I reached out to Anthony to say, can you tell me about your business? We spoke a little bit, and Anthony actually does a lot of good stuff. So to
Thank you.
kickstart our conversation, um, what is mortgages in UK and how do you explain it in simpler terms?
Okay, so I actually have a book that's coming out maybe by the time this airs, which is called A Mortgage is a Really Big Loan. And it's come about
Really?
from exactly that question. So, they say 47% of people in the UK, even people that have a mortgage, don't understand mortgages. And part of that is coupled with just the lack of financial literacy throughout society, not just with mortgages. But essentially, what a mortgage is, it's a really big loan. It's a bank fronting you or giving you the money to purchase a property. And one of the great things that I love about what I do in finance is numbers are numbers, right? So
Okay.
numbers are numbers anywhere on the planet. So it gives me the opportunity to help people understand the fundamentals that they can make informed choices. And I love that you kept mentioning brokers, because that's another concept that a lot of people don't understand. I've been in finance for over 30 years, and I worked for Halifax, I worked for Lloyd's, I was a area manager for several banks. And even me, as someone that was working in finance for a period of time, I didn't
Yeah.
understand or fully understand the benefits of using a broker as opposed to going directly to the bank. And I guess the key benefit of using a broker instead of going directly to a bank is this: choice. When you
Okay.
go directly to the bank can only talk to you about their products, right? So if you go into, any bank, you might have an amazing banking advisor, but they can only talk to you about bank X's products. So that means if you're a skilled worker or if you don't meet that vanilla profile of the ideal client or customer, they're going to say no. But it doesn't mean that you can't get a mortgage, right? And that's what has
Yeah.
happened, particularly in the skilled worker visa community. Someone's gone directly to their bank, to NatWest, Lloyd's, whatever. The bank has said no, we can't give you a mortgage. And they go out and they tell people, and they don't, it's not a malicious thing, but they're like, oh, you can't get a mortgage because the bank has said that if you're a skilled worker, you can't get a mortgage. The benefit of going to a broker is we brokers work with 20, 30, 40 different lenders. So when you come to us, the same process of providing information that you would do with your bank, you're providing it to us. But now we're looking at 30 different lenders rather than just one lender. And if you are upfront and very clear with what your situation is from the onset, an experienced broker like me, during the conversation, we're just filtering down to the lender that will lend to you. Because at the end of the day, it doesn't matter what somebody else can or cannot get as far as a mortgage. You want to know what you and your family can get.
I see. Amazing. There's a lot of terms that I've been writing down there, but I'll come back to that in the course of our interview. So now you mentioned a lot about your experience in banking, and I'm sure you understand numbers as you have said. So one of the most important questions that a lot of people are asking in terms of it's a big loan. So as a first-time buyer, someone who has just relocated to UK, how much deposit would they need for the first time? I understand there are different places where people can actually get these mortgages, but what's on average? What are we looking at on average?
Okay, I'm glad you framed the question the way you did, because it gives me an opportunity to unpack that
Yeah.
question and give you the best answer I can. All right. So, first
Okay.
and foremost, let's just look at when people are talking about averages and what, someone can get and what they need. Usually in conversation, people are talking about the vanilla client. All right. So, what I mean by
Okay.
vanilla client, that's the ideal client that you never get. That's the person with excellent credit, A. That's the person
Yeah.
with UK passport, B.
Yeah.
That's the
Yeah.
person with a 25% or more deposit. So
Yeah.
they have excellent credit, UK passport, 25% deposit. Pretty much anyone will lend to them. All right.
Oh,
So
I
this
see.
brings me back to when people talk about averages. Keep in mind, I'm in London. The average
Yeah.
house price in London, I think, is around 400,000. If
Okay.
you're talking about percentages and numbers, remember, numbers don't change. 10% of 400,000 is 40,000,
40. Okay.
right? The average house price up north might be 190,000. 10% of 190,000 is 19,000. So when someone asks that question, it's not really that useful for any broker to just give a number, because
Okay.
we have to first understand where you are, what the average
Yeah.
house price is, etc. So to just give a percentage is also unfair, because, as I said, if you're the vanilla client, you may be able to qualify for 5% down because you have a UK passport, good credit, and you have
Yeah.
access to 25%. But the moment you add or layer on anything that's outside of that excellent credit profile, you
Yeah.
reduce the amount of lenders and you change the criteria. The best thing, and people don't like this, and I probably lose clients, is I always say to people, let me know your circumstances and we'll work backwards. So let me know how
Absolutely.
much you have, what your visa status is, what your credit history is. And instead of me giving you an answer for the average person, I'll give you an answer for you and your family. Because that's all that matters. Because if I tell you, well, you need 5%, and then and your average house price is 19,000, so you come up with that money, and then you come back to me and you found the property and you want to move forward, and then I come back and say, oh well, that 5% was for Jake. It's
Oh,
not,
I
it's
see.
not useful. You want to know what you qualify for. So a broker, and you said something at the beginning of the call, Kuda, and I really appreciated that. Most brokers aren't going to charge you to have the conversation,
Yeah.
right? Yeah. So you can have the conversation, get the information that you need for you, that you can then make an informed choice. So in short, what is the average? Doesn't matter. How
Oh,
much does someone need? Doesn't matter. It's what do you need as an individual and as a family, and what can you actually get based on your circumstances.
okay. So you kept on mentioning the percentage value of, in your conversation, you spoke of 5%, you spoke of
Yes.
10%, and then you spoke of 25% given that your circumstances are good. I'm
Yes.
sure you mentioned 10% a couple of times. Can you just touch base on that in terms of, could it be the average amount of money that you can just calculate as a new person, or how does it work?
Yeah, that's again a great question. So the short answer is no. All right.
Okay.
So the short answer is no, simply because different lenders are going
Mm-hmm.
to have a range of different products. So right now, if we were to go into a fact find with a client and it's a couple, and we were to look at all the different products available for that couple, there might be 1,400 different products. There's probably
Okay.
7,000 different products on the market right now, right?
Mm-hmm.
So what you will find is the higher the loan to valuation, and I'll explain what that is. The higher the loan to valuation that you're going for, the fewer products there are potentially, and certainly the higher criteria. So what is loan to valuation? Loan to valuation means, and we'll just use the easy numbers. If
Yeah.
you're buying a house that is valued at 100,000,
Yeah.
right?
Mm-hmm.
If you were to pay down 5,000, right, that would be a 5% deposit,
Yeah.
right? That means the
Mm-hmm.
bank is only financing 95% of the loan. So the loan to valuation is the difference between how much the bank is giving you, the mortgage amount, and
Mm-hmm.
the value of the home. Now, keep in mind, banks are banks. They're not people that are looking at you as a person. They're looking at risk. Now, understanding that, in as far as history is concerned, the trajectory for houses is they
Mm-hmm.
increase in value. They do increase in value over the long term. They may go up and down, but if you look at a long term trajectory, the house prices go up. So a bank is going to look at risk. So they're going to say, well, if you've paid down 5%, so you now owe us £95,000, and the
Mm-hmm.
house prices go down and something goes wrong and we need to sell that property, we have a greater risk that we won't recoup our money, right? That's
Oh.
why they reserve those lower percentage down. In a lot of cases, they reserve it for more stable clients, good credit, established in the UK, etc. Whereas if you're going to pay down a 25% deposit on a property, so you've now paid down, instead of
25.
5,000, paid down 25,000, there's less risk for the bank because they're only lending you 75,000 now. If anything goes wrong, there's enough fat in there that they'll be able to recoup their money. So to come back to the original question, yes, even for skilled workers, there are deals out there that you can pay down 5%, depending, and that 5% is going to vary depending on the house price. So there are deals, and I have done that for people recently. Those three types of clients that you mentioned, Kuda, so the
Yes.
family, the single person with kids, and the single person without kids. In the past 6 weeks, I've gotten each of those customer types mortgages as skilled worker visas, right? So it can be done. But also keep in mind, products change with the market. So
Yeah.
they may pull those products at 95%, and then the starting point might be 10%. So they do
Okay.
exist, but I always caution people, let's look at you, let's look at your circumstances and see what we can do to help your family.
Absolutely. So now, you spoke about skilled worker visas. Okay, so I'm sure you do understand what a skilled worker visa looks like, because you have just mentioned that you've worked with some of those people. What sort of documents do the skilled workers, to be specific, you have to put together in order for them to qualify for mortgage? If you can just maybe list just a few, the critical ones.
Yeah, yeah.